Are you tired of living paycheck to paycheck, struggling to save, or feeling overwhelmed by the U.S. financial system? Whether you're just starting your financial journey or looking to build real wealth, you're in the right place. Because today, we're going to break down the exact steps you need to master your finances in America, from budgeting all the way to investing and building long-term wealth. Welcome to USA Finance Hub, the place where smart Americans come to learn how to make their money work for them. If you're serious about gaining control of your financial future, make sure to hit that subscribe button and turn on notifications because we drop valuable, no-fluff content every single week. Let's get started. First things first, budgeting. This is the foundation of everything. Most people skip this step or treat it like a chore, but a good budget is your financial roadmap. Without it, you're flying blind. So how do you budget effectively in the US? Start by tracking your income and fixed expenses, things like rent or mortgage, utilities, insurance, and minimum debt payments. Then, look at your variable expenses, groceries, gas, dining out, and so on. The 50/30/20 rule is a great starting point. 50% for needs, 30% for wants, and 20% for savings or debt repayment. But here's the key. Budgeting isn't about restriction. It's about intention. When you tell your money where to go, you're no longer wondering where it went. Next up, saving money. Most financial experts recommend having an emergency fund of at least 3 to 6 months of living expenses. That may sound like a lot, especially if you're starting from zero, but even $1,000 can prevent a financial disaster. Open a high-yield savings account. There are plenty of FDIC-insured options offering interest rates well above traditional banks. Automate your savings every payday so you're paying yourself first before spending a single dollar. Now let's talk about your credit score, your financial reputation. In the U.S., your credit score impacts everything from loan approvals to interest rates and even some job applications. To improve or maintain your score, follow 3 simple rules. Pay on time. This makes up 35% of your score. Keep your credit utilization low. Aim for under 30% of your limit. Don't open or close too many accounts at once. This affects your average credit age and inquiries. Consider using free tools like Credit Karma or your bank's credit tracker to monitor your progress. Moving on to investing, because saving alone won't build wealth, you need your money to grow. If your employer offers a 401k with a match, contribute at least enough to get the full match. That's free money. Then, look into opening a Roth IRA or traditional IRA depending on your tax situation. For beginners, low-cost index funds or ETFs are a great place to start. They offer diversification, lower risk, and solid long-term returns. Use platforms like Fidelity, Vanguard, or Charles Schwab. They're reputable, beginner-friendly, and have excellent support. And don't forget, investing isn't gambling. It's about long-term growth. Time in the market beats timing the market every time. Let's talk taxes, a topic most people avoid, but you can't afford to ignore. Understanding your tax bracket, eligible deductions, and credits can save you thousands every year. Tools like TurboTax, H&R Block, or working with a certified tax professional can help you file smarter, especially if you're self-employed or have multiple income streams. Make sure you're contributing to tax-advantaged accounts like SAYS, IRS, or 401ks. These not only lower your taxable income, but also help you grow wealth in a tax-efficient way. Now onto real estate, one of the most powerful wealth-building tools in the U.S. Whether you're buying your first home or looking to invest in rental properties, the key is to understand the numbers. Don't buy based on emotion, buy based on math. Look at your debt-to-income ratio, local market trends, and how much home you can realistically afford without becoming house poor. For investment properties, use the 1% rule or cap rate to determine if a property is a smart buy. Always factor in hidden costs like maintenance, insurance, and property taxes. Next, passive income. This is income you earn without trading your time for money like rental income, dividends, digital products, or affiliate marketing. Start small. Maybe you write an ebook, start a monetized YouTube channel, or invest in dividend-paying stocks. The goal is to build multiple income streams so you're not fully dependent on one paycheck. Let's shift to retirement planning, because the earlier you start, the easier it gets. Social Security alone won't be enough. You need your own retirement strategy. Use retirement calculators to estimate how much you'll need and work backwards. If you're in your 20s or 30s, even investing $200, $300 a month consistently could turn into $1 million portfolio over 35 years. Diversify across tax-deferred, like a 401k, and tax-free accounts, like a Roth IRA, and rebalance your portfolio annually to stay aligned with your risk tolerance and goals. And of course, we can't forget about credit cards. Used correctly, credit cards are a powerful tool, not a trap. Choose cards with rewards that match your lifestyle, cashback, travel, or points. Pay your balance in full each month to avoid interest. Use features like purchase protection, extended warranties, and fraud alerts to your advantage. Also, avoid store cards and high-fee cards unless you're sure you'll benefit from them. Your credit card should work for you, not the other way around. Finally, let's talk side hustles, a must in today's economy. Whether it's freelancing, food delivery, tutoring, or selling digital products, there are countless ways to earn extra income. Side hustles can help you pay off debt faster, build savings, or even become your full-time income stream. Just make sure it aligns with your skills, schedule, and long-term goals. Let me wrap this up with one powerful truth. Financial freedom isn't just for the rich, it's for the disciplined. Every dollar you save, invest, and manage wisely puts you closer to the life you want. At USA Finance Hub, we're here to help you get there. Whether you're 18 or 58, it's never too early or too late to start mastering your money. If you found value in this video, give it a thumbs up and share it with someone you care about. And don't forget to subscribe to USA Finance Hub for more practical tips on budgeting, investing, credit, and building real wealth in America.